All right, here we are in the last section of the chapter, 3.6 credit card statement notes. These are all the different vocab that we'll be discussing during this section and that will be coming up on your upcoming tests next Monday, Tuesday. What information does a credit card statement give you? Credit cards can be used when making purchases in person, by mail, by phone, online, and more. In most situations, you get a receipt for the transaction, but it can be difficult to keep track. So credit card statements will give you all of this information on them, and a billing cycle is predetermined amount of time, usually 30 days or 31 days, by the month for each. And then throughout your billing, the credit card company takes an accounting of your credits and debits. You may choose to get information about your account online, or you can get a paper credit card statement at the end of each billing cycle. Example 1, Jane Sharp has a flashcard revolving credit card. At the end of a 30-day cycle, Jane receives her statement listing all her purchases and the payments made. Locate each of the terms below on Jane's statement. So the account number, where is that here on her statement? 2653-8987-6098. If you can see right there where the account number is listed, that's what we're going to type here in the box. Right, what is her credit line? So looking around on here, we have billing date, payment due, all the different transactions, previous balance, payments, and right here under all that is the total credit line. That's $8,000. Available credit, total available credit shows right here below it, 763652. The billing date is January 23rd. The payment due date is February 2nd. The previous balance is shown right here, $150.50. The payments and credits, looking on here, do you see it? 75 shows here and the 75 shows here. New charges are $284.45. The late charge, there isn't one. Finance charge is $3.53. The new balance right here, $363.48, and the minimum payment is $20. So all this information can be found on your statement, and they all have titles. Okay, in example 2, the summary portion of the credit card shown on the previous section looks like this. Explain how the new purchase amount was determined. So the previous balance, the payments and credit, the new purchases. So the new purchase amount is from all the things she purchased during the month. So if I scroll back up, this gift shop, this pizza place, this department store, this festival bookstore. These are all the things that she purchased. And if you add up all of those, you get that total of $284. So if you add up all the purchases, it totals the $284.45. Explain how the new balance was determined. So you have a previous balance and a payment and a new purchase and a new balance. So check this out. We take the previous balance, we subtract the payment because that's money that you paid to the account, we add the new purchases, $284.45, and we add the finance charge, and this equals your new balance. So let's double check the numbers. $150.50 minus 75 plus 284.45 plus 353, and then that 363.48 is your new balance. So let's write down in words what just happened. So we took the previous balance and we then subtract the payment we made, and we added the new purchases, and we added the finance charge. And this gave us the new balance. Pasquale has a credit limit of $15,000 on his credit card. His summary looks the following. How much available credit does he have? So if his previous balance was this, he made a payment of $4,000, he made these new purchases, and he has a late charge. We need to find out his new balance. So we're going to go do these steps. So previous balance of $45.98 and 12 cents minus his payment plus the new purchases plus a late charge plus $578 of his finance charge. Let's go add this all up to get our new total. Minus 4,000 plus 1368.55 plus 20 plus 5.78. We get $19.92 and 45 cents. New balance. So available credit is his 15,000 credit line minus $19.92 and 45 cents. So he still has $13,007.55. Myrna is examining the summary section of her credit card statement. She has checked all the entries on her bill. She agrees that everything except the new balance determine where the error was made. So previous balance minus a payment in credit plus the new purchases plus a late charge plus a finance charge. So $2476.15. And so since it says her balance is $2576.15, it's off by exactly $100, which is the payment she made. They must have forgotten to apply the payment of $100 to her balance.